What was once a threshold of $20,000 in payments has now been lowered to $600, and this is going to affect millions of Americans who receive something called a 1099-K form. But what exactly is this new IRS $600 tax rule? Well, how will this affect millions of Americans paying taxes? In this video, I'm going to cover exactly what you need to know about this new rule and how it works, how it may impact you, and what steps you need to take to avoid the issues with the IRS. So let's dive in. The American Rescue Plan Act, it all started when Biden administration had this American Rescue Plan Act of 2021, and it brought on some significant changes, with the new IRS $600 tax rule being a big part of that. But before this act, many people used third-party payment platforms like PayPal and Venmo or Cash App, and they only received this 1099-K form if they made over $20,000 in income or more than 200 transactions. But this rule significantly got lowered, and the threshold will be affecting more than 20 million taxpayers this season. And many of those people who use PayPal or Venmo for resale or freelance work, and that includes many small businesses. But under these rules, these platforms now must send a 1099-K form to the IRS to any account holder for any transactions that meet this new threshold. You can see where the problem is, right? And their aim is to close these tax loopholes. We get it. But for years, this has been a concern that many income, especially smaller accounts, go unreported. So the IRS wants to close this loophole by targeting wealthier individuals and larger businesses that might use these platforms to sidestep taxes. That makes sense, right? But as we see, big businesses aren't the only ones that are getting targeted by this tax rule. So from $20,000 to $600 is the threshold. Now, under the old rule, the threshold amount was $20,000 and 200 or more transactions. So most casual sellers or part-time gig workers, they didn't need to worry about this 1099-K form or payment platforms like PayPal or Venmo. But now if you earn over $600 a year, these platforms must report your income to the IRS. And it doesn't matter if you have one transaction or 100. If your total income crosses $600, you're going to get a 1099-K form, and so will the IRS. So if you don't report this income, guys, accurately on your tax return, the IRS is going to be coming for you, and you could face penalties, audits, and even more stuff from the IRS. So how does this 1099-K form actually work? Well, let's step back here and talk about this 1099-K form itself. So what exactly does it do? The 1099-K form is a payment platform that sends out your regular payments across a single platform that crosses that threshold amount. So this form will include all the details of your payments. So when the IRS receives a copy of these payments, they have to match the information on that form with the income that you report on your tax returns. And if there's a mismatch, guess what? You could get flagged by an audit or even face penalties. But only some of the payments are getting reported. Some transactions are actually excluded from this 1099-K report. Payments for personal reasons, like splitting a bill with friends or sending a gift or reimbursing someone, are excluded from this 1099-K report. These types of payments aren't considered taxable income. And also transactions through platforms like Zelle, which are direct bank-to-bank transfers, are excluded from this reporting requirement since they're operating completely different from these third-party payment processors. But one important thing to remember is that this $600 threshold applies separately to each platform. So for example, if you earn $400 on PayPal and $300 on Venmo and they both fall below that limit, no 1099 is going to get issued because you haven't crossed any threshold with that platform individually. But why is this law problematic? Well, here it goes when it gets worse. Because the IRS isn't perfect, and as we've seen last year, they sent millions of incorrect CP-14 notices to people. So even if these kinds of payments aren't taxable, they could still end up landing you with a tax form. So this means if you don't keep detailed documentations or receipts for every transaction just to prove what's taxable and what came from your friends, let's say, and what isn't taxable, there could be an issue here. There could be a big issue here. So if you don't, you'll be risking penalties from the IRS and something that shouldn't have been taxed in the first place. So for example, let's say you bought a couch for $1,000 a couple years ago, and then you go to sell it for $700 and you receive a payment from PayPal. Makes sense, right? But even if you don't owe taxes on that $700, the platform's still going to issue a 1099-K form because that sale exceeded $600 threshold. You see it? So in reality, if you sold a couch for less than what you paid, or so it's considered a loss, and since you didn't make a profit, this sale isn't taxable. However, this 1099-K report will gross the amount of $700, which could create a false impression of income, and you must adequately clarify that on your tax return. The IRS and the current threshold for 2024. So the $600 threshold has faced multiple delays due to backlash and logistical issues. You can only imagine. Now, a new Republican bill is hitting the floors of Congress to stop the Internal Revenue Service, the IRS, from snooping in Americans' online transactions. But for this year's tax season, the IRS is temporarily increasing the threshold to $5,000. So if you earn $5,000 or more from a third-party payment platform like PayPal, you're going to receive a 1099-K this tax season. So my question to you is, what do you think about all this? Have you ever used PayPal or Venmo or Cash App or Zelle for any online transactions? Or do you prefer cash or a check or wiring funds directly into your bank account? Let me know in the comments. Go ahead and put it below. I'm curious if this affects you, or if it's a good idea, or if it's a bad idea, or it doesn't mean anything to you. And as you know, my videos are here on this channel to help you to avoid those pitfalls that are costly. I hope you're enjoying them because I'm making them for you here. So go ahead and subscribe, and I'll see you in the next video. Take care, guys.